Peter Schiff, as I understand it, there are only a certain number of bitcoins that are in circulation right now. If I wanted to buy one, where would I go? What would I do?
Well, I wouldn't encourage you to do that, but there are plenty of online exchanges where you can go to buy Bitcoin. But yes, there is an artificial scarcity there because they can only mine, and I use the word mine in quotes because they use mining to try to create value that doesn't exist by using terminology associated with gold. But since you can only mine 21 million of them, that's the limit. But of course, there's no limit to how many competing digital currencies that have no value at all, just like Bitcoin, can be created. In fact, Bitcoin is already forked twice. They have Bitcoin Cash and they have Bitcoin Gold, and there's 21 million of those, and there's an unlimited number of forks that can come off of the Bitcoin network. So the only value in the cryptocurrency now is the fact that it's going up, and people are buying it because they believe they'll be able to sell it to somebody else who also thinks it's going to keep going up because he can buy it, he can sell it to somebody else who has the same outlook. But as soon as the currency really starts to decline, it's going to implode, and eventually it will go down to its true value. And Jamie Dimon is right, and I don't often agree with Jamie Dimon, but in this case I do. I think the ultimate value is going to be zero. And I do think that the idea was born out of the frustration from 2008. You know, I was one of the people who predicted that crisis, who was short the subprime market, and I understood the problems with the fiat monetary system. And a lot of the people, the early adapters of Bitcoin, understood the problems with fiat money, with the dollar, with the euro, with the yen, with all the quantitative easing and 0% and negative interest rates. But the problem was these cryptocurrencies have more in common with fiat than people believe. These are fiat cryptocurrencies. What people really should be doing, if they're worried about the dollar or the euro or the yen, is they should be buying gold. They should be buying a real alternative.
Who's fiat,
that
Peter?
Is real, honest money. Excuse me?
Who's fiat? Fiat means that somebody gives this thing value.
No, fiat, well, fiat just means let it be, by decree.
No, it means this is money by fiat, and I'm the government, and I'm making this money. So who is doing that with Bitcoin?
No, but the backing of fiat currency comes just from faith, right? It's just confidence that it's always going to have value.
Right, faith in an issuer.
That's what Bitcoin has in common with fiat. It doesn't matter. There's no intrinsic value to the Bitcoin. All money, previous to governments creating paper money, all money was a commodity first, and then a medium of exchange second. Gold was a particularly good commodity to use as money.
That's a good sign.
No, but it's a commodity that has no value. It has no use.
I think commodities are valued what the market values them at. Gold is valued at what the gold traders value it at.
Okay, Peter Van Valkenburg.
Because there are things you can do with gold. And people have valued gold for thousands of years.
What percentage of the value of gold trading on commodities exchanges is actually from use as jewelry or in medicine or in science?
Okay, Peter Van Valkenburg, let's talk about Bitcoin for a moment here. Okay, go ahead, Peter.
Yeah, if you even try to use it for payments, because I remember initially when people talked about it, they said it was great for micro payments. You know, if you want to buy a cup of coffee, you can pay for it in Bitcoin. Well, it's impossible. You know, it costs, I don't know, $30, $40, $50 just to do a transaction. So you can't buy something for $1 or $2 or $5 or even $100 because the cost of doing it is such a high percentage. It's much cheaper just to use a MasterCard or a Visa. It's 2 or 3%. So you can't use it as a medium of exchange, and people that are living in a lot of the poorer countries where a lot of people think, oh, it's ideal for people in these poor countries that have really irresponsible central banks, although they're all reckless and irresponsible, but some are more so than others. But the annual incomes are so low that there's no way these people can afford to use Bitcoin. I mean, people are just using it now as for pure speculation. I was watching on CNBC today, they had some kid that dropped out of high school that's now a multimillionaire because he happened to buy some Bitcoins, and now they're treating him like he's some kind of financial genius. But this is all popular delusions and the madness of crowds. Yeah, you could find all kinds of crazy reasons to rationalize why the price is going up. But it's going up for one reason only, and that's because people are buying it. And they have to make up reasons to justify the activity.
Peter.
But eventually, it's going to crash.
Okay,
and that's how bubbles work.
Okay,
I've seen it before.
Okay, let me get to Robert. Robert,
let me say.
Go ahead.
Let me say a point here. These futures contracts. When I first heard about Bitcoin years ago, and people were buying it, one of the things they were telling me they liked about it was that it didn't have any futures contracts. They said, you know, we don't like gold because it can be manipulated. They have futures contracts, and so we want to buy Bitcoins because there are no futures contracts. Now I'm hearing, oh, buy Bitcoin because there's futures contracts. You know, it's everything about the original. What people liked about it is changing, especially with criminals, because initially criminals were attracted to it because they believed it was anonymous. And now I've heard situations where criminals were caught precisely because they use Bitcoin. It's almost like a digital fingerprint. And as I think the governments are going to crack down more and follow this, then I think eventually criminals are going to walk away from it. And that was its only real value as a money laundering.
So Peter's claim is that we keep changing our story.
Or as a store of value, it's no good.
As to why it's valuable. And what I have to challenge in that question is, who do you mean we keep changing our story? There is no Bitcoin company. There is no Bitcoin marketing organization. There are people over the world who are using open source software to build a connected network of computers to achieve a result. It's rather like the early internet. There were people all over the world connecting their computers. They were getting their newspapers from them. They were getting their email from them. And people laughed at those people. They said, you're using a ridiculous system. You're using something that's never going to have value. You're changing your story every day. It's for porn. It's not for porn. It's for online banking. But eventually we figured it out, and now we all use the internet.
One moment. I'm going to go around the table. Sarah, and you first.
I am talking.
I just want to say, Peter,
fascinating discussion. But we're focused on Bitcoin.
Yeah.
Why are we not focused on cryptocurrency? Look, Bitcoin was about, 80-some% of the cryptocurrency in 2017.
That's right.
Right now, it's about 55. There's competition coming in. So it could be the Napster of everything.
That's completely possible, yeah.
Right? So we need to understand that. So it could just go crash to zero, but the cryptocurrency market is here to stay. The sooner you accept it, the better it will be.
Okay, Robert,
if you get a cryptocurrency backed by gold, if you have instead of a fiat cryptocurrency, then it could work. That defeats the entire purpose. The purpose is not to rely on somebody's faith and credit, not to rely on somebody to have the gold in a warehouse, but rather to rely on an open network of computers to record verified information.
I just want to go to Robert. Robert, can governments declare this illegal?
I think it's out of their hands at this point.
Yeah.
I think at best
they
could. Well, I suppose, and how?
So my background is law. I'm a lawyer. I work in Washington, D.C. at a nonprofit. If you want to talk about government policy, it's what we do day to day in the last 3 years that we've been operating. And what I can say is there's no appetite for that. People always think there's this monolithic government that's fighting this monolithic technology and that they're at odds. In reality, government is just people. And we go into congressional offices and we go into regulatory agencies and we find people who are curious, who want questions answered. We find people who are excited and actually would love to be able to buy some if ethics rules didn't perhaps prohibit them from doing so.
At the same time,
all they do is they crack down
one moment, Peter. One moment.
They require more.
An international financial structure is threatened by it. Look what Jamie Dimon is saying. For him to say this is a fraud.
We don't actually see any lobbying against it. So we always thought that when we file comments in, say, a CFTC regulatory proceeding, and this is our perspective, we think that futures are a good idea.
It doesn't have legs.
That's possible that they don't take it seriously, but we've never run up against somebody submitting comments or lobbying in favor of the banks to shut this thing down. That kind of brinksmanship, that kind of battle is not happening. And by and large, this is a regulated technology. As I said, the exchanges are regulated as money services businesses. The futures markets are now regulated as swap execution facilities, and it can be traded in derivatives contracts. In addition, you have consumer protection regulation. Every state in this country has been coming to the proposition that maybe they regulate these things like money transmission. So you have to get a license to do it in California.
That's the point I was getting at.
When people have to supply.
What about the regulation of currency moving across borders? Wouldn't governments want to be involved in that? Wouldn't governments want to know where that money is going?
Well, at a minimum, the exchanges themselves need to beef up their security, or many of them should. And if they are either self-regulated or regulated by governments, they have more incentive or they're pressured to do so.
And they are regulated, and so the exchanges in general, I think, are doing a very good job, especially the U.S.-based ones, at having good cybersecurity programs and risk-calibrated anti-money laundering programs.
Okay, Peter, go ahead. Peter Schiff.
Yeah, when you have to deal with all of the KYC, the anti-money laundering, know your customer, when you have to present your social security number, a passport, a utility bill, when the IRS is issuing 1099s every time somebody sells a Bitcoin, when you have all this complication, all this regulation that drives up the cost even further, you've destroyed the original basis for the appeal of the currency.
Which is it? It's used by criminals or it's too regulated? I don't understand. It's not regulated or it is regulated? Everything is bad.
When they have the regulation, when they have the regulation, it's going to make it more expensive to use it.
But they have the regulation now and people are using it now.
No.
It's regulated.
No, right now they're using it as a speculative asset because they think it's going up.
Yeah, that's fine. If it's digital gold, that's fine. People were buying gold in the 90s.
Okay, 1 moment. I want to ask Peter Schiff then. Well, what is the bond bubble that we're in? Global bonds that are 11 trillion out of them yielding negative returns on investors.
Yeah,
this is not a bubble.
Argue. Look, we have a lot of bubbles, but the bond. Look,
it's the nature of
central banks around the world that have
Bitcoin is $300 billion. This is 11 trillion.
We have central banks creating money out of thin air all around the world. We have bubbles in bonds. We have bubbles in stocks. We have bubbles in real estate. I'm not arguing that, but we also have a bubble in cryptocurrencies. That's one of the bubbles that I think central banks have created. And the reason I think the central banks created the Bitcoin.
What I would say is you should be glad that there's a new asset that's uncorrelated with existing economic systems and maybe can be a good hedge against other bubbles.
It's not correlated with anything.
Yes, that's great. That's an excellent thing.
It's a bubble.
Yeah, when things get too correlated, Peter, we get things like 2008.
I've just got a couple of minutes left. Sorry, I want to ask you this. Would you, 1 moment, Peter,
before a lot of these other bubbles.
Right, would you advise people to invest in Bitcoins?
I wouldn't, right? At this point, I wouldn't. I completely disagree with Peter, though. Yes, it is a bubble, and it is going to lose a lot of value, but it's going to pick up. In 5 to 10 years, the price will be higher than where it is now. But could it go to 5,000, 6,000? Because of the soaring demand that created this bubble? The answer is absolutely yes. And again, I'm going to bring it back to competition. There are other cryptocurrencies. Bitcoin can lose a lot of value, but the market is here to stay. And I think Wall Street needs to understand that.
So when you say it's going to go down, will it stabilize at some point?
Absolutely.
And why will it stabilize at some point?
Because there's going to be demand, continuous demand, and we're seeing this.
How do you know?
Look at we're seeing it. Look at all the countries that are using it. You mentioned that the countries that are too poor to use it. If you look at the Bloomberg data, actually those are the countries who suffered from inflation. Zimbabwe, Venezuela, Turkey is up there. The 6th highest country using this. So the demand is here to stay.
Cryptocurrencies are inflating like crazy.
All right, we're going to have to leave it there, gentlemen. Thanks to all of you for being with us. This could continue.